Hello, friends. Welcome to Nirmal Bang. I'm Piyush Jain, and today we are back bringing to you another new IPO. A new financial company basically is entering the bourses. The name of the company is Jana Small Finance Bank Limited, and joining us on the show today is Mr. Ajay Kanwal, the MD and CEO of the company. Ajay, welcome to the show.
Thank you, Piyush, and hello to all viewers.
And always, there was a time when they were public sector banks. They were commanding all the legacy, all the deposits. Then finally, this RBI started giving licenses. New age private banks came up. Second round of sort of reforms came up, and then actually started coming up new different types of lenders, and we started having different types of specializations, and that actually has led to a lot of sort of unbanked borrowers actually getting banked, and also then eventually they grew up and started actually gaining size. And this is never a simple journey, sir. So my first question to you is, it must have been a long journey. Help us understand when it started, how it was for you.
Thank you, Piyush. So, first, Piyush, I must tell you that, see, not just India, any part of the world, the single biggest challenge is credit to the middle to bottom end of the economies. I mean, that's fundamentally the issue every part of the world.
Hmm.
And it's a function of how uh, people are able to exhibit their incomes, how they can give comfort to the lenders, and that's a gap. I mean, it's just a global issue, and India obviously has the same challenge, which is how do you get more and more credit to where it's needed the most. And so I do think that serving the underserved, uh, I think, is a key part of small finance banks mandate. And it's been a very interesting journey, I must say, because I spent most of my life, which is the first 28 years of banking, in City and Sansi. So I hadn't seen a lot of serving the underserved.
And that's even more interesting, from absolutely high core corporate, and then actually you created such a distribution network. Please carry on.
Thanks, Piyush. But listen, the reality is a consumer is a consumer. Doesn't matter how wealthy he is versus how not wealthy he is. By which I mean is, every consumer would like to make sure that he gets a bank which kind of meets all his needs. He wants a banker who knows him. And I think that doesn't change. And one thing that I've learned, having been now 6 years working with Jana, so my past six are with Jana, is that listen, a consumer is still a consumer. The only thing that has changed, Piyush, in the past, you could not give different level of customers. So if you have higher wealth customers, you could give more services because the ticket size were larger. But now with digitization, you really can democratize all the services because frankly, it doesn't cost much.
Hmm.
So now treating a consumer and saying, listen, I will be a primary banker and doesn't matter whether you take a 12 lakh rupees affordable housing or a 1.2 crore prime mortgage, I can still give a turnaround time of 1 day,
Hmm.
right? And that is possible because of digitization. And I think one thing that one should understand now, and which is where I think when you look at profitabilities and ROEs, because at the end where the demand is high, if you can create a model which serves the customer as a primary bank, you have a risk model to address it, and you have the patience to do a good bank, the returns that you get as a bank tend to be much higher. And that is my learning in the last 6 years, which is build a bank for middle end of India. Create something which offers an entire needs end to end from liability to assets. And I mean, you look at ROEs and ROAs, that's a reflection of that.
Well, you're talking market language, sir. So I will I'll give you a sort of credit for that. And let's take one step more forward here. How many sort of customers or how many sort of borrowers you have right now?
So our existing active customer is 4.9 million.
Okay.
Our total customers that we have served, where we have data access and which you always use in the, wherever you want to make offers to a closed loan base,
Hmm.
that's 1.2 crores.
Okay.
As an institution, Piyush, we have been around for 16 years.
Hmm.
But the earlier avatar was the microfinance. and now,
Hmm.
of course, last 5.5 years as a bank.
Right. And you're operating almost pan India?
Yeah, so Piyush, we're in 24 states. We have 771 branches, and we have roughly about 20,000 people working in the bank.
Oh, that's great. And that fulfills the 25% obligation of the RBI. Like there is a minimum amount of, so I think about 35% of your branches are in rural areas and the remaining are spread out.
Right. So you're right, which is RBI's norm for scheduled commercial banks is to have 25% in unbanked rural centers. We have 36%, mainly because we felt that our microfinance business would work better in the rural areas
Hmm.
because these are high touch, these are large groups of women and pretty much underserved. So we've opened a lot of unbanked rural branches where we essentially do group loans to the women.
Right, sir. And perhaps the interesting part will be let's understand the spread of these loans. Like how much, what are all you're doing? Are you doing housing finance? Are you doing labs? Are you doing microfinance, loans to farmers, loans to sort of rural workers? Like, help me understand the spread here so that we understand the sort of what type of color actually we should identify the bank is.
So Piyush, first is and very important is when we became a bank, we decided that to build a resilient, long-term and sustainable bank, we have to be diversified, and our balance sheet should reflect that of a consumer. So from literally 0% odd secured loans in 2018, we're at 57.8% secured.
Hmm.
Now, this journey, which is turning secured, essentially comes from doing property backed business. So we
Right.
chose that we will choose the business which gives us a long term relationship with the customer. And
Hmm.
as you know that whether you do a housing loan or a LAP, it's minimum 5 years and average 7 to 8 years relationship.
Yes.
When you have a long relationship with the customer, then you can do multiple products during the journey for both the customer and his family.
Hmm.
And that inherently means better operating leverage because you have literally zero cost of acquisition.
Hmm.
More importantly, also means better credit because you know the person. So that's been a basic model. So we began in 2018 with affordable housing and micro lab, MSME again backs by property, gold loans, two wheeler. So it is basically a primary bank or a bank of first choice where the middle segment of India gets full needs. And our focus was to turn the bank more and more secured. Also
But sir,
interesting,
but
sorry,
vehicle loans and gold loans don't form a large part of a portfolio, right?
because
Or
they're
they?
new launch.
Yeah, exactly.
Correct.
So, are you focusing more on the gold loans? Is that something which you think perhaps could actually be an interesting area?
Absolutely, yes, Piyush, which is we will do more of gold loans as time passes.
Hmm.
Right now, our bias is that gold loans is a cross-sell product to other customers.
Right,
What we don't have is specialized gold loan branches with the same full aim of selling gold loans.
right.
Because one thing we have decided to do is a customer company. That let's take a consumer. So let's say you're a affordable housing customer.
Hmm.
If you come for a gold loan, no processing charge. In the first 6 months, if your repayment is good, you will get a business loan.
Hmm.
You will even get a two-wheeler loan. So
Okay.
idea really is rather than create many customers through multiple product verticals, it is to get in a consumer and do multiple needs with the customer.
Well,
And
and that's how basically you actually are able to create higher margin, higher returns because you are data mining the same customer more and more. So
correct.
that's absolutely awesome. Um, how much is microfinance as a percentage of revenue, sir, for you, or profit, or borrowing, whatever you want to use the metric?
So first, you asked me the name. I couldn't answer that completely. See, my name today is 7.8%, and I must say that 7.8% is after turning 57.8% secured. As you know, as you go more and more secured, the NIMs will be obviously lower because
Yes.
secured margins are lower,
Hmm.
right? That's how it is. So, but I do think that consumers typically have 70 to 80% of their balance sheet as secured. And one day our bank will reflect that customer. Because typically a secured customer means housing loan, four wheelers, two wheelers. Then a small portion will be credit cards and personal loan, but that cannot be the big lending, right? So the bank will reflect that. Our NIMs at 7.8% is September NIMs.
Mm-hmm.
This is after seeing a cost of fund increase in the first half, which has gone up from 7.2 to 7.6, so 40 basis points. We still are at 7.8, which I think are very healthy NIMs.
Very strong
And
names,
like
sir. Very strong names.
and that's a function of let's look at ticket size. Micro lab.
Mm-hmm.
Our ticket size is 9.5 lakhs. Our yields are 16 odd percent.
Okay.
Affordable housing. Our ticket size is 13 lakh rupees.
Mm-hmm.
Our NIM is 12.26.
Oh, very nice. I think that is quite strong. Okay.
So I think because of this, because the ticket sizes are smaller,
Mm-hmm.
the credit models are around the informal segment, we tend to get higher NIMs.
Mm-hmm.
So NIMs are sustainable to my mind. Uh, as you know, why I'm saying sustainable is, see, listen, today when we do affordable housing or we do micro lab, we are doing in a market which are full of competitors.
Mm-hmm.
So obviously, with all the competition around, you find the level pricing, right? You can't get away with high price or low price
Yeah.
because there's enough and no competition. I mean, low price you can, but high price you can't. So I think we are in that mode. So I think we have sustainable NIMs. We are a secured bank. We are property as a primary collateral.
And obviously, if you're saying that 58% is secured, basically then actually you become a sort of more of a secured financier. And then there are ancillary sort of ways of borrowing or lending on different types of products. So that is something which I think is important, identifiable point. But from there, sir, like suppose if the interest rates start getting cut, uh, are you going to maintain the NIMs and pass through the benefit to the borrowers? How it works at your end?
So absolutely, listen. Um, like I said, the market is very competitive,
Yep.
right? So if interest rates do start going down, I guess all of us will make sure that rather than just enjoy higher NIMs, we certainly will like to give better and better rates to our customers. But remember, we are, as a bank, there are two sides of the balance sheet. Today, my depositors are smiling more because they're getting very good rates on deposits.
Mm-hmm.
Tomorrow, when the rates come down, then they'll smile a little less because their deposit rates will go down. But then the borrowers will smile because their rates will also come down. So, I mean, for us, we have a corridor NIM, as we call it, which is my difference between my borrowing and lending. I think we'll try and keep that steady. But at the
Sure.
end of the day, one of the customer will be more happy than the other, depending on the cycle of interest rate.
Sure, sir. I was just looking at the spreads here, just going back on the question. Um, and please correct me if the sort of spread has changed and I've not noticed that. Housing finance was roughly around sort of 13 to 15% of your total borrowing exposure. MSME loans. MSME loans are largely secured.
All secured by property.
So again, part of secured portfolio. Large and mid corporate loans. Are these working capital loans or again secured loans? How they
They're,
are?
they're basically a small set, and they essentially are lending to NBFCs.
Ah, okay, okay. So again, basically almost 15 to 16% MSME secured, 13 to 15% housing finance, secured loans. Vehicle loans are by inherent actually secured loans. Gold loans again, nascent, another secured loans format. Within the sir MFI, like what's the nature of MFI loans largely? Like how much are they secured? How much are what is from nature?
So, Piyush, MFI is about 42%.
Yep.
Out of 42%, 10% of 42 is sourced by the BCs,
Mm-hmm.
where they source and collect for us.
Mm-hmm.
32% is done by us, and roughly it is 60% individual loans, which are graduate borrowers of group loans, and 40% are GLG model in the rural areas. So we are in rural microfinance, that's 40% of our book, and 60% of our book is individual loans who are graduates of group loans. And those are the two businesses in the microfinance. And microfinance is fully unsecured. There is no collateral at all.
Yes. So I think our viewers should understand that you are actually spreading out across all divisions. So that is something a good point I think we discussed. Now let's move towards your cost to income ratio. because that is obviously going to be sort of boosting up profits as you sort of keep improving the cost to income. Cost to income ratio, sir, has been improving consistently over the last 2 3 years. Where does it stand right now? And also give me a flavor from the perspective of how many branches are in new stage. They're not mature at present. So give us a flavor actually where we are heading towards over the next 12 24 months.
So first, I think Piyush, the reason cost income has been on a consistent decline. I mean, other than being, as a new bank, we have to use money very judiciously and the rest, has been the digital journey. So we have been digitizing non-stop over the years. I'll give you a simple example. When we began the bank, sorry, we had at CPC, which is what we call as centralized processing center, roughly about 400 odd people. Balance sheet size is now six times where it began in 5.5 years. The number of branches right now is 156. We have 90 robotic processes which have been put in place over the last few years, which make sure that as the volumes have gone up, because see, a robot can swing as much as, I mean, he can churn as much volume as you want, and for him, a holiday or a late night or through the night doesn't matter. So I think one of the primary reasons that we have been able to do faster turnaround time, we can reduce cost, and we can improve accuracy is by robotizing our backend.
Okay.
Similarly, I mean, the current exercise is to move a lot of our customers into digital signatures. So the amount of money you save in printing documents, making mistakes while somebody forgets to sign, then sending them for storage, courier cost, storage cost. See, thanks to digitization, it is actually an annual reduction of cost. And we really spend time saying, okay, now what is the big focus of reducing cost? So
Hmm.
yes, so that's the first answer, which is
So
reduction of cost has largely been through efforts to digitize and reduce.
and also, sir, I would say that it is reflecting in your OPEX because your OPEX is one of the lowest in the small finance banks. So perhaps what you're saying is getting reflected there. Just small question, sir, before actually I move to my next. Is there some sort of thing where you attain a particular scale, then your cost of borrowing could come down further? Because I think your cost of borrowing, where is right now, I think there's still room to sort of bring it down. So when it happens, sir.
So you're 100% correct, Piyush. So I think that'll happen a bit more gradually because the old borrowing should run off and the new borrowing should be at a lower price.
Okay.
Now, while we become profitable and the new borrowing should have been at a lower price, the new borrowing should come down and it will come down, but I think it will be more gradual.
Okay, sure, sir.
The
But I
only
think,
good news,
yep,
Piyush, can you still hear me, right? So, only good news is see, all our borrowings are largely from three refinance institutions: NABARD, SIDBI, and NHB.
okay,
So, we do have no other borrowings which are any short term in nature. We only borrow long, 5 years, 7 years, 10 years. That is very important to us because, from an ALM perspective, as we are getting secured, long term borrowing is beneficial to us.
yes.
So, while cost of borrowing is high relatively because you take longer term borrowing, it does give us a lot of safety and security.
Asset liability is matched, so the profile
Correct.
is matched. Yes.
Correct. It helps the profiling.
So definitely, I think perhaps, but I think it's good to note. I think for our viewers because you always have a scope for improvement and profitability, and that is always good actually for the stock. Also, you can look forward to in the future. So, one question sir, around. Let's understand how much funds you're raising in this IPO. What's the usage of the funds? Where's the Taiwan capital right now? What happens when the funds get infused into the company from this IPO? Please help us understand.
So, the IPO will be for 462 crores of primary. The price band is 393 to 414. There is offer for sale separately of 26 lakh shares. So if you multiply that by the price band around 100 crore rupees, so let's say 560 to 580 crores types will be the possible need that we will have to raise now. Now, the entire 562 plus a pre-IPO money totals about, 462 plus pre-IPO totals about 575 crores,
Mm-hmm.
which is a primary issue. So, if you take the overall issue size 575 plus 100, out of 575, we already raised about 120 or 113 odd, so 462 is left.
Mm-hmm.
That entire money goes as tier 1 capital to the bank.
Okay.
Our current capital adequacy as of September was, or rather not current, the September number was 17.5% of capital. So this will of course take the capital adequacy higher. And yes, I mean, entire will be used for growth because the bank is growing. We do need capital, and we will maintain very healthy levels of capital adequacy after the capital raise.
So then, how much amount of money which you will be able to lend after this IPO? So what I'm trying to ask here is that when you will need the next round of fundraising, with how much this money will be sufficient, sort of to do that.
Okay, so I'll give you context. September PAT
Mm-hmm.
is 212 crores.
Mm-hmm.
So 575 we will raise through IPO. I've already raised 212 crores as profit, so it becomes 700 crores. Why I
Mm.
say so is because see, 575 is not the only capital.
Obviously,
Also, our
yes,
PAT gets added in, and
yes,
our
yes,
PAT
yes.
is at
700
19%.
you would have. Yep.
Correct. So a combination of the two,
And what's the
we don't.
what's the leverage, sir? What's the leverage like? What's the multiplier effect
So
here?
I think post IPO the leverage will be about six odd times.
So should
Uh,
I assume that at least five times this money can be churned?
yeah, so you should add this plus you should add the profit,
The,
and combination of that can be obviously used to increase the asset book. So Piyush,
Mhm,
to give you a straight answer, we did not see ourselves raising capital for at least 3 years.
mhm,
The other piece I must tell you, in my current 17.5% capital adequacy, just about 1.5% is tier 2. As you know, tier 2 can be 50% of tier 1. So if I did want to raise capital even after 3 years, we
mhm.
can choose whether we'll raise tier 2 capital or we'll raise more equity. So it'll fair for both you and your people who are engaged watching this uh,
Sure.
show is that there is no next capital raise on the horizon in a hurry.
Okay, that sounds good. And also, it gives us a visibility that even with a five-time multiplier, we're talking about almost a 6,000 crore sort of lending program, and that gives a good visibility, perhaps, even for the sort of profit profile, growth profile. As it also talked about, with time, as you gain size, the cost of borrowings will also come down. RBI perhaps will also give you a helping hand. We'll close with my last question, and that perhaps should be my favorite question. How's the budget according to you for your sector? What do you make out of that? Was the finance minister kind enough to sort of help the bond market cool off? Is that going to help you in your cost of borrowings? Overall, how is it for you?
So Piyush, I think the stock market is already telling us how the budget is liked by everyone. I am no different, but I think picking up specific spots, which I think all of us should be very focused on, is like you rightly mentioned, the bond prices have cooled off. The government has announced a lower borrowing program than most people were expecting. It also said that the fiscal deficit um will be lower, which I thought was good. I think important they also mentioned things like focus on SHGs. I think for folks who are in the microfinance business, that's a positive. And
Mm-hmm,
also it's good for people who have a rural bias because
mm-hmm,
it does mean that the rural areas will get more capital, so to say, or access to funds. So I think that is a positive. I did see a lot of focus on how we will grow infra, the capex. And I think for that, I think small businesses, whether they're contractors, they're transporters, etc., I mean, they will also benefit. So if you ask me, I do think that it's a budget which keeps our economy, really growing very warmly, and we have been doing that for some time. And it also gives confidence. I must say that My takeaway from the budget was like, yeah, it's a good budget. And when
Mhm.
I say good, I mean it really will drive everything harder. We'll of course see more details after elections, as has been announced, and then we'll, I'm sure. But right now I think the momentum is very good.
Well, on that positive note, let me extend all the best wishes to you from our viewers, from our side, for a very successful IPO. We'll stay in touch when the results come around. But for now, all the best to you.
Thank you so much. Thank you.
And dear viewers, thanks a lot for watching us. Hope you enjoyed this conversation.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.